Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Vinodh Srinivasan, who is the MD and co-head of Structured Credit Group with Mizuho Securities. Vinodh, thanks so much for giving us some time today. I should say we're recording this in New York at the end of October. Before we get into the meat of the conversation, where we're predominantly going to chat around ABS and capital markets, do you want to tell our watchers a little bit around Mizuho's place in the aviation sector?
Sure. So we're pretty much a full-service investment bank in the U.S. Mizuho sort of evolved from acquiring RBS's North American business about 7 years ago. Within aviation, we lend unsecured to all the lessors. We do DCM unsecured bonds for the lessors. We do warehouses for the lessors, and we do ABS deals for the lessors, as well as portfolio sales. I guess where we've not been really active is with the airlines, because due to some legacy issues way before I got here. So that's something that's on the come. Like we're hopefully we'll start lending to airlines and be active with them. But like right now, it's all aviation lessor focus.
And maybe starting off with the ABS markets, which you guys heavily play in, can you give us your perspectives on where that market currently sits or doesn't sit, right? We know there's been a stalling in the market kind of post-Russia and in the challenging rate environment that we are in. What's your take on where the market currently is?
Sure. So just going back a little bit, if you think about the run that we had through early 2020 with regards to aircraft ABS, it was a steady build up to about 9.6 billion of issuance in 2019, which was call it 10 billion, but that was the highest. And then obviously that was in 2019, and then 2020 obviously because of COVID there was very little issuance. And then 2021, there's a huge bounce back, and we almost hit 10 billion again. So it's 9.5, 9.6 billion, depending on what stats you look at. And that was obviously driven by the low rate environment we were in 2021, when the Fed basically pumped money into the system because of COVID, behaving the same way that they did during the global financial crisis, which kept rates low into 21. And pretty much every lessor, whether it was, and I'll come to the ABS piece, but issued, the investment grade lessors issued as much unsecured debt as they could in that environment. So they're set for a while. And then the ABS issuers all issued debt only deals. So there was no E-notes, no portfolio sales. And what's really happened this year, and it's not particularly focused on aviation alone, but with regards to everything, rates have gone up, right? So 5-year swap rates, which are the basis for which the aircraft ABS structures have been in terms of tenor, those were at 150 in 2021. They're now at 450, so the 300 basis points increase there. Credit spreads that were about 150 basis points has now widened to about 350, so another 200 there. So effectively, you've had about 5% increase in debt issuance cost in the aircraft ABS world, which really the lease cash flows cannot support the same amount of leverage that we could issue at in 2021 under these new interest rates and yields that we're dealing with. Basically, the funding cost on an aircraft ABS deal tripled in 6 months between March to now, whereas lease rates are sticky, right? And they haven't really moved up to adjust. So we're in this little bit of a limbo situation where if you were to issue aircraft ABS deals, your leverage is coming down. Now, does that clear the warehouses where these things have been funded? I think they do, but it's kind of cuspy. Secondly, because investors have uncertainty around what the Fed might do with regards to rates, they're building in a cushion into the credit spread, which is then unfairly penalizing the issuers because it's not reflective of what their credit spread should be. It's totally understandable from the investor perspective, but that's just piling on, a level of debt cost that's unsustainable. So people that have access to bank facilities and warehouses, and banks are being very supportive, are just probably going to stay in there for a while until this rate environment changes or the lease rates adjust. But that's really the biggest issue with doing an aircraft ABS deal. The demand is there from the investors. It's just that you can't. The quantum of leverage you're able to produce is lower at this point.
So the unblockers, if I call them those, as you say, adjustment of lease rate factors, which we know there's a lag on, but seems to be trending that way.
Sure.
The rate piece, is it more a case of the rates settling. If they're higher, they're higher. That's the cost of doing business, but they just need to settle.
That's right. There's volatility right now. What's built into the forecast is 75 basis point, rate increase on November 2nd and another 50 in December. But honestly, nobody knows. It could be 2%. And so that volatility, to your point, has to settle down. And once we hit certainty around where rates are, then the credit spreads should adjust. You can always hedge out the rate piece. But even in that scenario, your issuance cost is still higher than where lease rates are. And to your point, leases that are long leases that planes are on, they're not going to adjust for a while, right? The lag could be like 3 years, 4 years. I think where this product, the aircraft ABS product, becomes more relevant to issuers is with like 15-year-old assets, because the lease rate factors on older assets are now higher, and that's why you're seeing the increase almost immediately. And those are going to have the yield in order to support the debt cost. The issue is the investor base, just like everybody else, when there's a time of uncertainty and distress, is running to the shinier new aircraft, which really doesn't have that lease rate factor. So that's why we're in a bit of a limbo.
And the other element which seems to be challenging is just the trading environment on the asset side. So you mentioned investor appetite is there. Are the portfolios there? Like, we've had the OEM slowdown, which means that big guys just seem to be hanging on that little bit longer, right? Do you think that's also a challenge, and how do you see that playing out?
So the trading aspect of it, obviously, ABS debt has been a huge factor in supporting trading, in the sense that you can provide non-recourse debt to buyers of those assets. It has also been a factor in selling portfolios with E-notes, obviously. Let's leave the E-note part out of it for a second. But the uncertainty in how much leverage you can get over the long term and what that cost of leverage is making the buyers of these assets uncertain about what they should pay for purchasing these assets, because that could vary quite dramatically depending on where your leverage is and your price of leverage is. So it absolutely is affecting the trading. The only thing that probably is not causing a big problem is the fact that the OEMs haven't been delivering aircraft. So the larger order book lessors are not under as much pressure as they normally are in terms of being able to needing to sell assets. So again, you're seeing them hold on to assets longer because they have to show growth, and there's no growth coming in from the order book side because it's slower. And I'm sure Boeing and Airbus are going to pick that up over the next few years, and it's going to go back to normal. But it's just this interim period when you're right, the trading seems muted as well.
And you mentioned the investor appetite being there. Have you seen any trends, even post-COVID, to the nature of investors coming at the ABS space? Have we seen an evolution of the buyer, or is it kind of what was there before, more at a trend level than an individual buyer purchaser?
I think a lot of the investors that would play today and played in 2021 are the same investors that played in 19. Maybe the individuals changed shops during COVID, but a lot of the buyers, in terms of the largest buyers, are all the same buyers. There are, on the periphery, there are a couple of new investors that have come into the space and a couple that have backed off. But largely, I'd say is the same, and they're very active across other asset classes in the ABS world. Typically, every year there's about 200 to 250 billion of ABS being issued. Times like this, obviously half of that is autos and credit cards, which are self-liquidating pools that are 5-year legal maturity, that are 2.5-year weighted average life, and get to AAA, AA, single A. And times like these, when you think you may be going into a recession, there's uncertainty, people gravitate towards those asset classes. And actually, if you were doing flow ABS, it's going gangbusters. There's deals going on every day, every week. And then there's also whole business securitizations, data centers, other asset classes that are getting done. The issue in aircraft ABS is more driven, I believe, by the issuers and the lease rate factors than a lack of investor appetite.
And just to pick up that thread on aviation versus other asset classes, and maybe not, after the COVID challenge, there was still a huge demand, as you mentioned. In 21 it came back, which does speak to that maturing of the sector. But do you think we're a little bit compounded now, where Russia hits, that matters from a sentiment perspective, rate environment probably impacts, for the reason we're talking about, a little bit more? Would you have concerns that it kind of weakens the perception of investors as aviation as an asset class when they can place elsewhere? Or is this just kind of a natural timing thing that'll play out?
I think it's a natural timing thing that'll play out because, like I said, I've gone through the global financial crisis and COVID, obviously, and like people just gravitate towards less, what they perceive to be less risky, higher rated, parts of the capital structure. And remember, aircraft ABS deals are longer tenor. So the first thing that happens is people go to shorter tenor bonds, and you can't structure a short tenor aircraft ABS deal. So that's longer tenor. And then aircraft ABS deals only go up to single A. We've done 2 deals that have AA tranches, but they're very rare and small in size. Whereas like autos, credit cards, those asset classes, you can actually get to AAA, AA, single A. There's also a relative value thing when you think about, just going on from aircraft ABS. Remember, a lot of aircraft ABS was predicated by large lessor selling portfolios to financial investors. And financial investors were investing equity in aircraft portfolios mainly because they couldn't find yield in any other asset classes. Well, you've got a relative value issue right now where you can actually get consumer loans, senior bonds at 8, 10%. So, and equity on aviation hasn't moved up to 20 or 25. Yeah. So they're just gravitating towards, like I said, these buying opportunities they have, the investor base, with senior debt at yields that they haven't seen in 15 years.
And your thoughts around the secondary market and what you're seeing? Like I remember when COVID hit, I took a number of calls from people going, we're going to look at we're going to get some A's, we're going to pick them up cheap, and there's value to be had here. Didn't really play out, right? Truth be told, people didn't really want to sell out of them. What are you seeing at the moment in terms of secondary trades? Are you seeing appetite for buyer and sell side? And what levels of the kind of stack are you seeing it being played at?
So, great question. There has been a fair amount of trading through COVID and now. The problem is the block sizes. Like it's been like $1 million block, $2 million blocks, $3 million blocks. A lot of times people put bonds out on BWIC, which is basically, where people can bid on it, and then they won't trade, but they'll use it to mark their books for the bond buyers that need to mark their books and their positions. The issue is that most buyers of aircraft ABS, because of the tenor, have been insurance companies or asset managers that manage money for insurance companies. They don't have to mark to market, and they're buy and hold investors. So they buy it, they put it in, and it's done. So they're not really looking to trade out of those positions. And to be fair, the single A bonds pre-COVID or post-COVID are going to all pay out fine. It's just probably going to get extended because some deals are going to hit ARD. But if you're on the senior tranche, you're going to be fine. We have seen during COVID a lot of trades on the E notes and the C notes where people were trying to get as much return as possible, fearing the worst. That's just been exacerbated with like Russia, Ukraine, and the interest rate environment we're in. So I wouldn't be surprised if there are more E's and C's that were already marked down quite significantly that people just go, I want to be out of this position, I don't want to deal with it anymore, which might prove to be a buying opportunity for some others. But on the senior tranches, like I said, it's been small blocks, and that's purely because of the buyer universe, which has been insurance companies.
And we've seen obviously a number of deals that were being packaged in early 22, right? So that were getting warehoused and getting positioned, with the expectation that follow through that we saw in 21. What options are those deals taking at the moment, right? So we know obviously the warehouses probably might have 12, 24-month lifespan on them, so it mightn't be immediate, but it's near enough, right? So when you look at some of those prospective issuers, what are they looking at, do you know?
Sure. So a lot of the warehouses obviously got refinanced in 2021. Remember, we did $10 billion of aircraft ABS that were all debt-only deals. That was basically cleaning out a lot of warehouses. So they all got renewed into early this year. So typical warehouse is 2 to 3 year revolving, 4 to 5 year amort. So it's like a 7-year facility. Those will have availability into late 23, sometimes 24. So there's no gun to their heads with regards to having to take it out. The step-up pricing that typically kicks in after the revolving period is over, you're looking at late 23 into 24. So yeah, if the rate environment stays high like this into next year and there's no aircraft ABS or any other alternative products like term loans, et cetera, that actually make sense, then there's going to be a squeeze. But I think there's enough time over the next 12 to 24 months before that becomes an issue. In terms of what alternatives they're looking at, banks are being extremely supportive. I can tell you right now, like, the spreads on aircraft ABS, I said 350. Both banks are lending at 150 to 200. So, and they're seeing it as an opportunity to step up for their clients, so that when the times come back to be good, that they can be repaid. So, I don't necessarily see a huge issue today. It obviously becomes more of an issue if this rate environment continues, 12 months from now.
And kind of shifting gears a little bit, one of the transactions we saw in 21 was the loan-focused ABS.
Sure.
So kind of solved the Stonepeak Ballinger transaction. Rumors in the market, there's a couple other people kind of considering that route. Your thoughts on that product and whether or not it might become something mainstream?
I think it's going to be a piece of the puzzle going forward, because obviously from an investor standpoint, the relatively lower metal LTVs on those deals are very attractive to investors. The issue right now is that any loans that you put in place in 2021 or earlier is going to be based on that rate environment, and today's rate environment is much higher. So if they're floating rate, if the portfolio is largely floating rate loans, then obviously that adjusts with today's rate environment, and a loan CLO type transaction still may seem feasible. I do think these alternative lenders are going to be more of a factor going forward, mainly because banks that have been supporting these clients, the question becomes, if this rate environment stays long and you're not able to refinance the bank facilities, whether they'll be open to lending to new facilities or extending over time. They've definitely extended this year, but 12 months from now, could be a completely different ballgame. And that's where these alternative lenders, I think, will be an important factor going forward. And that loan CLO product will be fine 12 months from now because the loans have all been put in place in today's environment.
And a question then, I guess, around in bringing the structures back and hoping to see a material return of the market, are there more structural changes needed? So you would have seen post-COVID, your perspectives on the changes that were there. I've heard people say, they were fundamental and investors totally protected way more, and then other people say, they were cosmetic. So your views on the changes that were made kind of coming out of COVID, and you think more needs to be done on the structural side or not?
Sure. So coming out of COVID, there were a couple of 2 or 3 changes that were meaningful. The first is that the rating agencies now require you to have 9 planes novated into the structure before you can do an aircraft ABS deal. So previously you could close an aircraft ABS deal and then have the aircraft novated in over a 360-day period, where maybe even none of them had been novated. And when we did Sprite 2017-1, none had been novated in at closing, and it took but they all closed later. Due to some of the transactions in late 19, early 20, when the E-note buyers rejected the aircraft going into COVID.
Star ends up getting
right. Yeah. And then, as a result, the bonds got downgraded. When you had a 17, 19 plane portfolio that went down to 2 planes overnight, obviously the single A bond gets downgraded to a single B. As a protection mechanism to not have that happen again, the agencies are focused on how many planes are actually novated in. So that's one change that's happened. And then there's obviously the DSCR and other triggers. The windows have been tightened to smaller time periods where they can measure the changes. And then there's obviously cash being a big factor in these transactions. There's more cash that's being either pledged in or trapped, like security deposits were an optional thing that were pledged in pre-COVID, but then now they seem to be all being pledged in. Those were largely the fundamental changes that happened. Maybe the amortization tenors have tightened a little bit from what was done pre-COVID. I think going forward, we have to figure out a way to change this spread environment in order to be able to do aircraft ABS deals if this current rate environment continues, right? Meaning, the onus is on us as bankers, ABS bankers, to come up with a structure that allows these deals to get done at a lower cost, which then can match the lease rate factors, or we're just going to wait it out till the lease rate factors adjust.
Yeah, or this won't happen, right? But you end up in a situation where leases have an interest escalation trigger, right?
A floating rate lease?
Yeah, that are there, but obviously not commonplace, right? But if you had a floating rate lease portfolio, then you've got something to play with, right?
That's right.
I just did an interview with John Kluger a short while ago, so maybe we'll ask John for 15 of his aircraft that have that floating release with them. Can I ask you, the market obviously came back in a real way 14, 15 onwards.
Sure.
In theory, that's a life cycle, or we should be coming to a life cycle of some of those older transactions. Is there a bunch of refis needed, or what's happening in relation to the older deals?
So the older deals were expected to get refinanced when they hit what they call ARD, or anticipated refinancing date, right? Which was typically 7 years out. Some deals at 8 years out. You're right. It really doesn't make sense to refinance it in today's rate environment, right? Because you're taking a bond that was at call it 450 yield, and you're now at like 750 or 8% yield. Why would you refinance it? Because now if you were to refinance it, and you're trying to do another ABS deal to refinance it, your leverage is going to be lower. You may not even be able to take out generate enough proceeds to repay the debt. So the only refinancing that's possible is with bank debt, or an alternative lender or somebody, and that's probably something that could happen. But we were in a fairly low rate environment in 2021 where all these refinancings made sense. It would not behoove me to say that I believe that we'll be back in a rate environment that's definitely lower than where we are today, much sooner than people expect next year.
Your expectation, just on that point of the rate environment, predictions make foolish men, right? But I'm going to ask you two. One, your thoughts on when the rate environment settles, right? And that mightn't be cuts, but when it just settles, right? And then the second piece, let me answer that piece first.
So the consensus is that, the fact is the Fed's very focused on fighting inflation, right? And they're going to keep raising rates till they get inflation under control. Everybody was hopeful it'd be earlier this year, but the general consensus is hopefully by the end of the year. But the consensus in the market is that rates would stay high the whole of next year, maybe stable, but high, and then they would start tapering down in 2024. I think there are other factors that might cause that the reversion to happen much sooner. One is, we've got House elections this December in the US here. If the House goes Republican, then you're going to have Congress that's Republican and Democratic president. There's going to be a lot of political pressure on the president to do something because we'll be in a recession. And the way out of recession, as we do in America every time, is to print money and cut rates and use that tool. The second factor is that the dollar has become so strong that we're basically pushing a lot of countries around the world into a recession. So if you look at both of those factors, I think there will be a reversion in the sense that maybe not going down to rates like they were in 2021, but a downward trend much earlier in 2023 than the general consensus is. Now, if I was good at this, obviously I won't be doing this job, but that's just a gut feel, because I think I just don't see us hanging out like the 70s in a high rate environment for years on end. The society today is not constructed to deal with that. And so I just don't think it's going to happen.
Yeah, so someone made an interesting point the other day where they were saying, look, effectively, if you look back over time, when rates start rising, you can almost start an 11 to 12 month clock, because when they'll start ticking backwards, right? So hopefully we do get, as you say, Q3, Q4 next year. Really interesting stuff, just in closing, can I ask you your thoughts on when does the market come back, right? So, we've all these challenges that are there. When do you think we will start seeing deals close again?
You mean debt deals across the market, or ABS?
ABS.
Look, there are a lot of transactions that were worked on earlier this year. I think we'll see ABS deals that are maybe not as widely distributed, but placed with a handful of investors happening much sooner than people think. And then if we can somehow figure out a structure that addresses this rate volatility as well as the increased spread, that somehow brings it in line with the lease rate factors, then you could see quite a few deals happening. But I think there'll be deals, probably in the next couple of months into next year, but not the volume that everybody predicted, obviously, at the start of the year.
Well, Vinodh, I'd like to thank you for your time and insights and wish you and Mizuho a very successful rest of 22 and for 23 as well.
Thank you, and to KPMG as well. Thank you.